Silver just crashed 40% in one day. Gold just crashed 12%, its biggest crash in 40 years. And the silver collapse was the worst since 1980. $357 billion were wiped out of these two market caps in one single session. Now, what I'm about to show you is what the mainstream media is not reporting. They're talking about earnings. They're talking about AI spending. They're missing the real story when it breaks down what just happened with this market, because this wasn't a market correction. This was a warning shot. And if you don't understand what just happened, you're going to be blindsided on what comes next. So let's break it down. The other morning, Donald Trump made the announcement that sent a shockwave through every market on the planet. He's replacing Jerome Powell as the Fed Reserve Chair with Kevin Warsh. Now, if you don't follow the Fed closely, the name might not mean anything to you. But Wall Street, they panicked. Here's why. Kevin Warsh is what they call a hawk. That means he's prioritized fighting inflation over stimulating growth. He's the guy who would rather keep interest rates high and let the economy slow down than risk prices getting out of control. Wall Street was betting on the opposite. They wanted aggressive rate cuts. They wanted cheap money. They wanted the party to keep going. Instead, they got a guy who is going to take away the punch bowl. Within minutes of the news breaking, gold crashed down 12%, silver crashed down 30%, and the dollar spiked to the highest levels in weeks. Stock futures reversed so hard. This wasn't normal profit taking. This was forced liquidation. Margins were called out. Leverage traders got wiped. The CME is hiking margin requirements on precious metals starting by 33% starting Monday. And here's what most people are missing. And it isn't just about Kevin Warsh, because it goes way deeper than all of this, right? It goes about the independence of the Fed. Now, for decades, the Fed has operated independently from the White House, allegedly, right? Presidents could complain, criticize, but they couldn't fire the Fed chair because they disagreed with the policy. That norm is now being shattered. Trump has been attacking Jerome Powell for months, calling him a jerk, too slow Powell, you name it. His Justice Department launched a criminal investigation onto Powell, which shocked both Republican and Democrats in Congress. Senator Tom Tillis, a Republican, just announced that he will block any Fed nominee until the DOJ investigation is resolved. He said, and I quote, protecting the independence of the Fed from political interference or legal intimidation is non-negotiable. Think about what that means. The president's own party is pushing back because they're worried about what this does for Fed independence. Now, why should you care? Why should you care about Kevin Warsh and what he and his policies could potentially do? Well, because the entire global financial system is built on trust. Trust that the Fed makes decisions based on economics, and based on economics, and then based on not politics, So when this trust cracks, then the money will start to flow out of the U.S. assets. The dollar will weaken, the interest rates will rise, and not because the Fed wants them to, but because investors demand have higher returns to the compensation for risk. Now, let's look at all what's happening, because it's not just the silver markets, right? We've also had the dollar. We've also had the S&P 500 and everything else make drastic moves. The first has been the US dollar index, right? So if you look at the past 5 days, that announcement was made the other day down here near the bottom, and now we're seeing it start to skyrocket up here. So these aren't random moves. This is what's happening around the globe. And now when you keep on looking, it connects something else that happened earlier that day, because it was the deadline for Congress to also fund the government. And if they didn't reach a deal by midnight, well, we got another partial government shutdown. And that's where I think people are really starting to look at how this is going, because these all events are all intertwined at a certain point, right? The Senate just passed this funding bill, but the House might not vote it until Monday, which means that we're looking at a shutdown starting at midnight. And now I know what you're thinking. Shutdowns happen, markets shrug them off. But this time, I think this one's a little different, folks. And this is why I'm going to be diving in. So make sure you guys are subscribed to this channel if you're coming in and joining us, because We just came out of the longest shutdown in recent history. Economic data got delayed for weeks, and essentially here we go again. So now we are finding somewhat of a pattern, right? The Fed chair is getting replaced under political pressure, the government shutdown threat, trade wars with Europe over Greenland, criminal investigations into sitting Fed officials. I mean, we've got political chaos starting to infect economic institutions, and markets are getting very nervous. And that's when we get days like today. But there's one more piece to this puzzle, and that's what everybody should be worried about, because there's seemingly a bubble that is building underneath everything that is essentially leading to a big, big issue, because the Fed drama, the shutdowns, the political chaos, these are symptoms of a deeper problem. The market is priced for perfection in a world that is becoming increasingly chaotic. The Shiller Cape ratio, which measures how expensive stocks are compared to the long-term earnings, is at 39. The only other times it's been this high has been right before the dot-com crash and right before COVID. That doesn't guarantee a crash for sure, but it does mean that there's no margin for error. This week, $357 billion vanished from a single tech company because their cloud growth came in 0.4% below expectations. Literally just 0.4%. Why? Because investors are finally asking the question they've been avoiding. Is this AI spending actually going to pay off? Tech companies are spending $470 billion on AI infrastructure, data centers everywhere, chips everywhere, promises everywhere. But where's the revenue? Where's the profit? This week, the market said, hey, we're done waiting. Show me the money, baby. They pulled a Tony Maguire, right? They're essentially like, show me the money. So the investors are essentially looking at how the overall, just AI landscape is. And the market has been very forward looking with AI. And now that there's two things essentially here, right? There is essentially the AI bubble that has been, building up on a bunch of forward looking earnings where, there's been massive amounts of projections. And this isn't a problem in an environment when the interest rates are extremely low. Actually, this is probably beneficial, right? You want to get your money out of where it's potentially cheap and get it into some place that is a little bit more maybe secure, like hard assets or investing in the stock market or something else. Well, now that Kevin Warsh has been added as the Fed chair or announced, he likes to fight inflation. And all the inflation shines are showing that essentially it's not done yet. And because that's not done, well, these AI companies and their forward-looking, projections are going to be hurt, because at the end of the day, is there really going to be, a lot of cheap money in the future? That question isn't as clear as it once was. So now we're seeing when companies can't deliver, they're getting destroyed. And when the Fed chair news broke, they're getting destroyed. And silver's over leveraged, so that is getting destroyed as well. So we're seeing when things and investors are rewarding certain companies that are doing well, like Meta and Tesla, but also, penalizing those companies that aren't doing so well. And this is where I think the change of the market dynamics are starting to come in, because, essentially we're going to have two very drastically different markets, right? We're going to have one market where people are very forward looking, projecting out, and then any sign of the future being slowed down, that's where you're going to see major bumps in the road. And that's what we're seeing right now. And the other market is just, there's free money. So they're going to be tossing money at, essentially anything. But because we're not going to have that free money environment that everybody thought, well, we're seeing investors start to pull back a little bit right now. And, that's evident in the gold markets. That's evident in massive tech, because, at the end of the day, like I said, they're looking for that Tobey Maguire moment where they're essentially saying, show me the money, baby, right? Because Apple, Meta, Microsoft, Tesla, I mean, the AI race is on, and all of these guys shelled out billions of dollars to build out that AI infrastructure in 2025. And the mega caps up their spending in it several times to meet the demand, but we haven't really seen much of a turnaround from that. And that's where I think people are worried, right? And then, at the end of the day, people were going to be worried about inflation. And that's essentially why, we've seen the gold and silver run up, essentially been on a generational run, because everybody has been anticipating that Trump's pick for Fed chair is essentially going to lower interest rates to a very low rate. And so once he lowers interest rates to probably near zero, well, inflation is going to run hot. Well, Kevin Warsh is basically his biggest calling card all this time has always been, we're going to fight inflation. And because we're going to fight inflation, well, at the end of the day, we're going to have the dollar and other things suffer just to fight that inflation. He has been in 2008. He was sitting at the right hand of the Lehman Brothers. He's seen run-ups like this before, right? So now we're seeing in silver crash 30%, gold crash, 15%. The S&P 500 also crashed a bit. And we still haven't seen that all-time high in the S&P 500. I'm waiting. I think we're honestly going to see a 7,000 S&P 500 here very soon. And I wouldn't be surprised if we're going to, see that within this next week or two. So in February, we're really going to see it start to take off, right? So I think that it is something that is to keep a very close eye on. And when you take a peek at how, this Fed nominated Kevin Warsh, the Jerome Powell, I've known Kevin for a long period of time. If you really go and connect the dots on who he is, essentially his father-in-law is a big donor to Trump's campaign. He's known Trump for a very long time. He's going to do essentially what Trump wants to do at the end of the day, but the market isn't really seeing it like that. The market is seeing, hey, it's a guy that's previously, really tried to fight inflation. And this is something that, we need to get under control. So, this is going to be an interesting way seeing this all play out. And I'm going to be following it very closely. So yeah, you guys are saying never invest in silver again. It's too volatile. Stock market is, it is very tough to get invest in. And thank you so much for subscribing. Make sure you guys are all subscribed for those listening here, because I'm going to be diving into what this development is going to mean, how the Fed's going to be reacting to all of this, and much, much more. So make sure you guys are smoking that like Cheech and Chong, hitting the subscribe button, telling a friend to tell a friend, and I'll catch you guys all at the next one.